Doing well. We have October's profit and loss here, and so we'll start off at the bottom just to do a recap what we did for October. So we've got a revenue as far as cash collected in the bank of $118,000, expenses totaling $112,000, and for a net profit of $6,000. So this over here on the left has a year-to-date total revenue just north of $1.1 million. The expenses of a little over $1 million, and then a net profit. This right here, I've got to correct some things. I believe I double entered some expenses, and so over here on the bottom right, we have the bank account starting January 1, and then the bank account, this should be October. October 31st, it was at $128,000 for a cash-on-cash profit of $81,000. So much better off than we were last year. And then I'll show you real quick, if I can find it, what we were doing last year in October. So last year, October revenue, I remember we had real big problems with accounts receivable. And so our revenue, as far as cash collected, was $79,000, expenses of $100,000, and profit of a $20,000 loss. So definitely a whole lot better this October than last. Accounts receivable, as far as we sent everybody to collections, I think the end of June, and we only have about $4,000 outstanding right now. So much better than last year. So that is excellent news. And we also, as far as, I think we were about, it's almost $40,000. Yeah, almost a 50% increase in revenue. So that's great news. Let's switch back over, and we'll go from bottom up and just go over the expenses here. So training, that's just mainly Audible. We provide an Audible account that all of our team has access to listen to the books, suggest new ones, and download their own. So taxes, I believe we had a double payment here. Yep, this one right here for $5,000. I believe one was missed, so that was one additional week payment in this month. So we've got our subscriptions, and that's primarily, we've got Google Suite, Apple Storage, and we've got mainly Service Autopilot's the biggest one. And so shop cost, this just breaks down everything that goes into what I call the cost of the shop. The rent, $2,750. That will be going up. Here we had a great deal on our building. It has several offices, a little conference room, about 10,000 square foot of warehouse space, parking lot for about 20 cars, and a laydown yard. So we got into it at a sweet deal. It's like $1,000 a month for 6 months. We got in here April 2020, so right when COVID started, and then we wanted a more permanent lease as we like the place at Central, and so they're staging us up to what will be market rate eventually. So market rate was $5,000, and come in January, we'll go up $500. So it'll be $3,250 for next year. For 2023, it'll be $3,750. For 2024, it'll be $4,250. For 2025, and that's our last year as far as the lease is concerned. So we got our power, got 2 boxes here. Our phone cost I put into there. Any office supplies like ink or paper, stuff like that. And then the internet. So processing, that's just clearance. And then I put like bank fees if we buy checks. We got that. Marketing, spent $1,788, and that is primarily through, we had some fall cleanup signs come in, some big old signs we put up, and we did some Google ads. So that was where that came from. I accidentally used a card for my training program, so I'll have to pay that back. We've got, as far as the breakdown of pay here, this is myself. I give myself $4,000 a month, and then we had our first profit sharing as far as what I took part in, 10% profit share of the third quarter. So that was a $7,000 check. That was pretty sweet. And then Jeremy, who's also an owner, and he's the general manager. We've got, he's got his weekly pay, and then he's, a W-2 employee. Right now, I'm still an LLC, and like schedule, I forget what it is, but it's just an owner draw every month. And then next year, we'll switch over to an S Corp. So I'll be a W-2 employee for my salary, and then I'll take things like this as distributions. So Jeremy's, if you're wondering why Jeremy's is different, it's the same. It's just his has the tax taken out of it. All right, and then labor, the field team, we had $30,000 for the month of October, which does correlate pretty close. Let's see what the actual number would have been. 118,000 times 0.33. Yep, 38,000 would have been exactly 33%. So pretty close there. Paid underneath with all of our dump fees and things like that. So job materials, we've cut out all of our landscaping at the end of July as far as sod installs and using any equipment. So very low job materials, $628. That would be mainly mulch, I believe. Insurance, got that at $4,000. We had the revenue. Ice, $414. Still pretty warm here in Augusta, Georgia in October. Probably November too. So that $400 to $500 a month in ice. We will definitely be getting an ice maker. We'll buy it probably January or February. Got the fuel cost of just over $5,000. We use these WEX fleet cards. We have Circle K's all around here, and so I forget what the benefit is. I think they get like 10 cents a gallon or 15 cents a gallon as a discount, plus all of our guys have fuel cards, and all they can purchase is fuel. Franchise fees, that's now broken down into the command center, the answering of the phones. They don't do any emails, so they're primarily just answering phones for us. And then franchise, the monthly fee, $1,200. That's that flat fee. Went to Waffle House. Myself, Jeremy, and Darcel, our accountant. We met there, had our meeting about switching over to an S Corp, doing some finalizations for last year's tax return. And then Jeremy and I, we are going 50-50 into the Hepzibah location and trying to determine whether we should go ahead and make purchases, trucks and things like that this year to negate some tax liability. Equipment maintenance, I lump it all together with trucks and trailers and lawn equipment. So $8,600, and this could be, like you see here, I've been starting to kind of subcategorize. We've got trucks, we got 3 tows, so what happens when you got some older trucks. And then you see express oil a good bit. That is where we take our trucks for some quick fixes like starters or oil changes, tires, things like that. So we did have, some decent sized bills. I think that might have been some tires. But yeah, so one of the things that comes with having 20-year-old trucks. But then you go and you see trailers, got some supplies. That could be anything like edger blades, mower blades. When you see Laurelwood, that's our dealer and where we get all of our Stihl equipment and Exmark. And then Harry's is another dealer, so it depends on where they're at in town. Dump fees, Sample and Sons, that's our inert. If we go take this $20 is like a trailer load, dump trailer load. And then this $300 one, that's Big Dog. We keep it at the shop. So the guys, that's where we dump every day, is our 30-yard container. Debt service, we've got just under $4,000. This $2,000 payment, think we have 2 payments left. We've got one $2,000 payment that'll happen in November, one $3,000 payment that will happen in December. I'll either do that $3,000 payment and be done with it, or we'll have $1,000 left over in January. So, and then you've got Sheffield, that's equipment. USB, that's equipment, and that's equipment. Those are all mowers and trailers. Damages. There's some pretty high damages for October, and this gas line, I think that was clipped by a mower tire going into probably the HVAC or something like that. So that cost over $500. We had some glass damage. We had hospital bills from a team member that had a slip and fall off the trailer. And we had a water line, a main line get hit. So not digging. This main line was exposed. Trailer, just mowing the grass. And the mower tire went into the hole and broke the main line. So, yeah, almost $3,000 worth of damages this month. And that was, that would have added another 50% to our net profit. So that is unfortunate. That's what we have. We do give $50 for each Google review, 5-star that an employee initiates, and the name is inside of the review. And then in the accounting, that hit us pretty hard this month because Darcel is a friend of mine now that, he's been an accountant for us for several years, and he was behind on payments as far as didn't invoice us. And so that was a 10-month payment. So let's go back and retroactively kind of look at what could have been done to improve upon the situation. That $5,000 should have been $500. So that would have been $4,500 right there as far as this month is concerned. Added profits, that would have been like 3-point-something%. This damage case, all of that could have been avoided. Another almost 2%. And then I want to say there's a tax bill. So yeah, we'll call it $8,000. Yeah, this tax bill here, this extra one, which was, we'll just call it $2,000. Basically, $10,000 of expenses that could have been avoided / shouldn't have happened this month. So that would have been a $16,000 profit as far as operational efficiency, as an increase. So that would have been, about 13% added to our 5%. So that would have gotten us up closer to the 20% profit margin that we were looking for. But all in all, I'm just glad to be profitable. You can look back last year where we were $20,000 in the hole. So a lot of that issues last year, like I said, was accounts receivable. Let's just go ahead and look, see what we did. Well, we spent about $5,000 on travel. That was for the conference. So that was done in October last year for a January event. Let's see, what else did we have going on that could have been. I don't really see anything jumping out at me. Accounts receivable were huge though. We took in $80,000, and then our labor spend was $33,000. I know what it was. We had Jesse on payroll. He was our treatment manager, so that was adding about $4,000 to the labor because that's where I classified them. So that was where we had there. We had a whole lot more job materials. So again, with accounts receivable, if you've got larger landscape jobs where you had to pay for materials and you have jobs that aren't paying, we had $9,000 job materials last year, whereas we only had $600 this year. So that stands out to me. I love profit and loss because it definitely will tell a good story. It will tell the details of the story if you look through it. A little bit up on gas, but not much. And see, like equipment rental, that's what happens when you've got projects and you've got to rent equipment. Equipment maintenance was much less. Debt payment was a little bit higher. But yeah, pretty cool to look back. I think we're doing great as far as what we projected. Y'all can't see the screen. I've got like a little whiteboard easel, kind of like a mini piece of artwork, and it just jots down what we projected as far as for the year. And we did this, it was probably done and finalized before January. Just kind of a projection of revenue and things like that and profit. And we projected 1.3 million. So as far as revenue track, top line, I believe we'll definitely hit it. If you look where we were as well, as far as like November, what we did last year, did $96,000 in revenue. A lot of that I believe was recouping some AR. And then in December, we did $84,000 in revenue. And again, I do believe that was recouping some AR, accounts receivable. So if we hit our original goal from last year, which was $100,000, I believe in November, and $80,000 in December, we will be, where would that be? Be 180, be 1.32. So I believe we're going to hit our goal as far as revenue is concerned. Cash in the bank, I believe we were projecting about 150 is where we thought we would end up, and I do believe we'll hit that. So it got 2 more months left in the game. We're going to go hard, and I hope y'all enjoy this. If you have any questions at all, please feel free to let me know. I'll answer them in the comments. If you want to see anything different, let me know as well. Hope y'all have a great rest of the year, and I will talk to you soon.